Okay, so taxes. Everyone pays them. Everyone hates them. And if you're in school right now or just graduated, you probably noticed something. They didn't teach you anything about taxes. Nothing. You learned the Pythagorean theorem. You learned about mitochondria. You learned Shakespeare, but taxes? How the tax system actually works? How much you'll pay? How to file a return? Nothing. And that's not an accident. Because here's what they don't want you to know. Before 1913, there was no income tax in America. Zero. None. You kept what you earned. Then in 1913, two things happened. The Federal Reserve was created in February, and the 16th Amendment was ratified also in February. Then, 6 months later in July 1914, the IRS was created. 6 months. The Fed and the income tax, both created within months of each other. Coincidence? No. By the end of this video, you'll understand exactly why taxes were created, who benefits, who loses, and why the whole system is designed to keep you poor while the rich get richer. If you watched my videos on how banks work the Federal Reserve and inflation, you already know the financial system is rigged. This is the fourth part of that story. This is how they rob you directly. Let me explain. Okay, first, what are taxes? Simple definition. Taxes are money the government takes from you. You work. You earn $100, but you don't get $100. You get maybe $70. The government took $30. That's tax. And the government says they need this money to pay for stuff, roads, schools, police, military, hospitals, all that. Sounds reasonable, right? Everyone chips in. We all benefit. Except here's the thing. Before 1913, America didn't have an income tax. And we built railroads. We had schools. We had roads. We had the biggest economic boom in history. So if we thrived without income tax for over a century, why do we suddenly need it now? Good question. But before we get to that, let's talk about how taxes actually work. Because most people don't even understand the basics. And again, that's not an accident. They made it complicated on purpose. Here's how it works. Okay, so when you earn money, the government doesn't just take a flat percentage. They use something called tax brackets. And this is where people get confused. Let's say you make $100,000 a year. And let's say the tax rate at that income level is 22%. Most people think, okay, 22% of 100,000, that's $22,000 in taxes. Wrong. Here's how it actually works. The first $10,000 you earn, 0% tax. You keep all of it. The next $40,000 you earn, 12% tax. That's $4,800. The last $50,000 you earn, 22% tax. That's $11,000. So your total tax is $4,800 plus $11,000. That's $15,800, not $22,000. You only pay the higher rate on the money in that bracket, not your entire income. This is super important because people turn down raises thinking they'll lose money. No, you only pay the higher rate on the extra income. Okay, so why did I spend time explaining that? Because I want you to understand the mechanics before I show you the scam. The system is already complicated. Tax brackets, deductions, credits, exemptions, adjusted gross income, itemized versus standard. Why is it so complicated? Because complexity hides theft. If the system was simple, you'd see exactly how much they're taking. But when it's buried in forms and calculations and jargon, most people just give up and pay whatever TurboTax tells them, and that's intentional. Okay, now let's talk about the real history, the stuff they don't teach you in school. Before 1913, the United States had no income tax. None. How did the government fund itself? Tariffs, taxes on imported goods, and excise taxes on specific products like alcohol and tobacco. And it worked. America went from a bunch of farms to the biggest economy in the world, no income tax. But then something changed. In 1913, the Federal Reserve was created. Remember, from my last video, the Fed is a private bank owned by the biggest banks in America. It's not federal. It has no reserves. It was created at a secret meeting on Jekyll Island. And in the same year, February 1913, the 16th Amendment was ratified. This amendment gave Congress the power to tax income. Then 6 months later, in July 1914, the IRS was created. The Internal Revenue Service, the agency that collects income tax, 6 months apart, the Fed and the IRS. Why? Because they needed a way to pay the interest on the debt the Fed was creating. Remember how the Fed works. The government wants to spend money. So the Fed creates money out of nothing and lends it to the government. But the government has to pay it back with interest. Where does that interest money come from? You, through taxes. Before the Fed, the government couldn't borrow unlimited money. They were limited by tariffs and excise taxes. But after the Fed, the government could borrow as much as they wanted. And the IRS would collect the taxes to pay the interest. It's a perfect system. For them. The Fed prints money, the government borrows it. You pay the interest through taxes. And here's the kicker. They sold the income tax to the public by saying it would only apply to the super rich. The original tax rate was 1% on income above $3,000 and 7% on income above $500,000. They said, don't worry, this is just for the rich. You'll never pay income tax. Guess what happened? Within 10 years, the rates went up, way up. By 1918, the top rate was 77%, and the income threshold dropped, so more people had to pay. And it's been growing ever since. Today, the average American pays about 30% in income tax, plus payroll tax, plus state tax, plus sales tax, plus property tax. Add it all up, and you're working 4 to 5 months out of the year just to pay taxes. January, February, March, April. All that work goes to the government. That's called Tax Freedom Day. The day you finally start working for yourself instead of the government, and it keeps getting later every year. Okay, so who benefits from this system? Not you. The government benefits. They get unlimited funding for wars and programs and bureaucracies. The Fed benefits. They get interest on all the money they create out of nothing. The banks benefit. They're the ones who own the Fed. They get the interest payments. And the rich benefit, because they know how to avoid taxes legally. Here's the thing. The tax code is 75,000 pages long. 75,000 pages? Why? Because hidden in those pages are loopholes for rich people. Let me give you some examples. If you're working class, you pay income tax, 30 to 40%, depending on your bracket. But if you're rich, you don't take a salary, you take capital gains. That's when you sell stocks or property for more than you paid. Capital gains are taxed at 15%, half what working people pay. Warren Buffett famously said he pays a lower tax rate than his secretary. Why? Because his income comes from investments, not wages. If you own a company, you can deduct business expenses. Your car, your phone, your meals, your travel, all deductible. If you're working class, you can't deduct your commute. You can't deduct your work clothes. You can't deduct anything. Rich people can move money to offshore accounts. Cayman Islands, Switzerland, Panama, pay zero tax. Working people, your employer automatically takes taxes out of your paycheck. You never even see that money. It's gone before you get paid. This is called withholding. And it's genius for them. Before withholding, people had to write a check to the IRS every year. And when you physically write a check for $10,000 or $20,000, you feel it. You get angry. But with withholding, you never see the money, so it doesn't feel like it's being taken, it just never existed. It's a psychological trick to make you accept theft. And here's another one. If you overpay your taxes, the government gives you a refund. And people get excited. Oh, I got a $2,000 refund. That's great. No, that's not great. That means you gave the government an interest-free loan for a year. They held your money, earned interest on it, and gave it back with no compensation. You wouldn't lend your friend $2,000 for free, but you do it for the government every year. Okay, so let's connect all the dots. In 1913, the Fed was created. 6 months later, the IRS was created. Why? Because the Fed creates debt, and the IRS collects the payment. The government borrows money from the Fed. The Fed creates it out of nothing. The government pays it back with interest. Where does the interest come from? Your taxes. You're working to pay interest on money that was created out of thin air. And it gets worse. Remember my inflation video. When the Fed prints money, your dollars lose value. So they're stealing from you through inflation. But that's not enough. They also take your money directly through taxes. Inflation is the hidden tax. Income tax is the open tax. Together, they transfer wealth from you to the government and the banks, and the IRS has power that even the police don't have. If the police want to take your stuff, they need a warrant. They need to prove you committed a crime. They need a trial. The IRS, they can seize your bank account, your house, your car, without a trial, without proving anything. They just say you owe taxes, and they take it. If you don't pay taxes, you go to prison. They don't care if you're poor. They don't care if you made a mistake. Pay or go to jail. This is the same government that prints trillions of dollars out of nothing. But they'll put you in a cage if you don't give them 30% of your paycheck. Does that sound fair to you? And remember, none of this existed before 1913. No Fed, no income tax, no IRS. America was the freest and richest country in the world. Then the bankers created the Fed. Then they created the income tax. Then they created the IRS. And now you work 4 months out of the year just to pay them. Okay, so here's a question. A lot of you asked in the comments on other tax videos, why don't they teach this in school? Great question. Because if they taught you the truth, you'd be angry. Imagine if in high school they said, okay, class, here's how taxes work. The government will take 30 to 40% of everything you earn. You'll work January through April just to pay taxes. The money goes to pay interest on debt created by a private bank. And the rich have loopholes to pay way less than you. Oh, and by the way, before 1913 we had no income tax and America was thriving. But The bankers wanted control, so they created the Fed and the IRS, and now you're a debt slave? You think they're going to teach that? No. Instead, they teach you nothing. So when you get your first paycheck and see all the deductions, you just accept it. That's just how it is. They don't teach you about taxes. They don't teach you about the Fed. They don't teach you about fractional reserve banking. They don't teach you about inflation. Why? Because if you understood how the system works, you'd refuse to participate. So they keep you ignorant, and they make it complicated. And they make you feel like it's your fault if you don't understand. But it's not your fault. The system is designed to be confusing. The tax code is 75,000 pages for a reason. So you can't figure it out. And when you can't figure it out, you pay someone else to do it. TurboTax, H&R Block. Accountants. You pay money to figure out how much money the government is taking from you. That's insane, but that's the system. Okay, so what can you actually do about this? First, understand that the system is rigged. Don't feel bad if you're paying a lot in taxes. That's what it's designed to do. Second, use the legal loopholes that exist. If you're working class, you're limited. But there are still some things you can do. Max out. Retirement accounts, 401k. IRA, these are tax deferred. You don't pay taxes until you withdraw the money later. If you can start a side business, do it, even if it's small, because then you can deduct business expenses, your computer, your phone, your car, if you use it for business, your home office. Rich people do this. You should too. If your investing holds stocks for more than a year, short-term capital gains are taxed as income. Long-term capital gains are taxed at 15%. Donate to charity, it's deductible, and you're helping people instead of funding wars. If you own property, look into cost segregation and depreciation. These are advanced strategies, but they can save you a lot. And honestly, hire a good accountant. Yes, it costs money, but a good accountant will save you more than they cost. The tax code is 75,000 pages. There are loopholes in there. You just have to find them. But here's the thing. Even with all these strategies, you're still going to pay a lot in taxes because the system is designed that way. The rich have trusts, offshore accounts, shell companies. You probably don't. So yeah, you can minimize your taxes, but you can't avoid them completely, not legally, and that's by design. Okay, so let's wrap this up. Taxes. Everyone pays them. Everyone hates them. They don't teach you about taxes in school because if you understood the system, you'd refuse to participate. And it all connects. Banks create money through fractional reserve. The Fed prints money and causes inflation. The IRS takes your money through taxes. Every part of the system transfers wealth from you to them. This is the fourth video in the series. If you haven't watched how banks work, the Federal Reserve and inflation, go watch those. Because this all connects. Together, these 4 videos show you exactly how the financial system works. And once you see it, you can't unsee it. Drop a comment. Did you know income tax didn't exist before 1913? Did you know the IRS was created 6 months after the Fed? And if you want to understand how money really works, hit subscribe. Because I'm breaking down the entire financial system one video at a time. Next video, we might talk about Social Security, or the national debt, or how the stock market actually works. Let me know what you want to see. I'll see you in the next one.